For the last 50 years, the metal detector, that clunky, slow, inconvenient thing, has been the face of security. Well, today, we're looking at the company that's finally using AI to change all that. This is our analysis of Evolv Technologies. We're going to dive into how a revolution in security is building a really powerful new business model, but also how it's creating some pretty serious growing pains along the way.
All right, so let's jump right in by really getting a handle on the problem Evolv is trying to solve. For decades, security screening, especially at big public venues, has just been a massive headache. We've all been there, right? The super long lines, fumbling with the plastic bins, emptying out all your pockets. It's an invasive process, and it's built on technology that honestly hasn't changed much at all. It's slow, it requires a lot of staff, and frankly, it kind of ruins the experience it's supposed to be protecting. Now compare that to this. Evolv's whole answer is to make the entire screening process practically invisible. Their systems use AI, and they're designed to be totally seamless. People can just walk right through without breaking stride, and a lot of the time they don't even realize they're being screened. The big idea here is to boost security while making the visitor experience better, not worse. And the scale of this new approach, it's just staggering. Since they launched their main system back in 2019, Evolv has screened over 4 billion people. To put that into perspective for you, the company says that on any given day, they screen more visitors than the entire TSA does across all U.S. airports. That's huge. So the really crucial thing to understand here isn't just about swapping out old hardware for new, shiny hardware. No, this is a complete reinvention of the business model itself, all built around what AI and the cloud make possible. And that reinvention is built on one single core idea, what we're calling the subscription revolution. This is the moment where Evolv stops being just a company that sells you a box and becomes a service provider. It fundamentally changes their entire financial DNA. They call it security as a service. So instead of a big one-time purchase, customers pay a recurring fee. This fee bundles everything together: the physical gates, the smart AI software, the cloud analytics, and all the ongoing support. It creates a real long-term partnership. And what's so interesting here is the contrast between the old way and the new way. The old model, it's a one-and-done sale. You sell the hardware, make a small margin, and that's it. This new model creates a predictable recurring stream of revenue, and, this is key, it lets them deliver continuous value through software updates that actually make the system smarter and better at detecting threats over time. And wow, this chart really tells the whole story, doesn't it? It perfectly illustrates the financial power of that shift. According to their 2025 report, their subscription revenue is pulling in a super healthy 56% gross margin. But look at the other side. The one-time product sales, they're actually losing money, operating at a negative 12% margin. This tells you everything. The company's entire path to profitability hinges on this service model. It's not just part of the business, it's the whole game. So this whole service model is powered by a connected ecosystem of products. You've got the Express system for screening people as they walk in. Then there's the newer Expedite system for scanning their bags. And the glue that holds it all together is the Insights platform. Think of it as the brain of the operation, giving venues all the data they need to make their security smarter and more efficient. It's a layered, data-driven system. So, okay, this strategy is clearly working. It's pushing them toward being profitable. But as we dug deeper into their annual report, we found a pretty significant operational challenge that creates a really fascinating tension in their story. On the surface, the numbers look fantastic. For the 2025 fiscal year, Evolv reported a positive adjusted EBITDA of $11.1 million. I mean, that is a remarkable turnaround from a $21 million loss just the year before. It's a clear signal that the subscription model is really starting to work and drive profitability. But here's the critical counterpoint. In that very same report, the company's own management had to disclose that its internal financial controls have, and I'm quoting here, material weaknesses. For any analyst, that is a massive red flag. It basically suggests that their back office infrastructure is struggling to keep up with how fast the company is growing. And we're not talking about minor typos here. The weaknesses they listed are pretty fundamental. They're pointing to a lack of experienced people in their accounting department, ineffective controls over their reporting process, and even weak IT security for their financial systems. This is the paperwork side of the business, and right now, it looks like a significant risk. So with that duality in mind, strong performance on one hand and these weak internal controls on the other, what does the outlook for 2026 really tell us about where they're headed?
Well, the demand for what they're selling remains incredibly strong. The report points to some pretty powerful market tailwinds, like the urgent need to address public violence. Plus, they're having success selling more systems to their existing customers, and their partner channels are gaining momentum. You can see that in the numbers. They added 243 new customers last year alone.
Now, looking even further down the road, the company is being very direct. They're saying the next major phase of growth has to come from outside the United States. International expansion is specifically named as being essential for their long-term success. That's a huge opportunity, of course, but it also adds a whole new layer of complexity to their operations. And that really leaves us with the central question of this whole analysis. Evolv has definitely proven it can build innovative technology that people desperately want, tech that is reshaping an entire industry. But the big, lingering question for investors, for partners, for everyone, is whether its internal business processes and financial controls can grow up fast enough to build a stable, reliable foundation for all that explosive growth. That right there is the pivot we'll all be watching next.